All right, guys, so we're live. This is Sunday night before the market opens. We're about 4:25 p.m. Eastern on September 8th. So this is going to be our weekend pre-market analysis. So I'll get right into the charts. And first of all, I just want to go over, we look at the larger time frame charts for our guidance in our day trading. So we're day traders that look to take in trades, some in the Asian session, some London, and then others just during the U.S. session. Some will trade the London session and then come into the U.S. session. So really, that's something you have to decide on for yourself, what works best for you. Some people have day jobs. They can't trade the U.S. session, so they look to trade at night the Asian session. And that's typically when I look for gold is 8 to 10 p.m. During those evening sessions, and then also trade the U.S. session. So that being said, we like to take our trades on the smaller time frame, the 3, 5, 10-minute time frame to get in for our entry, and like to close out those trades by the end of the day. So that we're considered day traders. Scalpers, not necessarily. Scalpers get into a trade. They want to be in a trade for a few minutes, and then they get back out. I don't consider myself a scalper. I'll get into a trade off a good entry. I will close out part of that trade when I'm at X amount of profit, and that's based on your monthly goal. But then I leave runners on, because how many times have you gotten in a trade and then gotten out? You close the entire trade off only to see the market continue without you. And then you're trying to decide, should I jump back in? Should I stay back out? Should I jump back in? By the time you make that decision and you do jump back in, guess what? That typically seems to be when the move's over, and you get caught up in the end of the move. So you never know how far they're going to go, where the end is, where it may turn and reverse. And unfortunately, if you get in and you close it all out, you typically try to get back into another trade. And that's where you'll sit there and you'll be in a day, you'll be like, well, I had a good trade at the beginning of the day during the first hour or so of the market, and then I've had these losing trades. That's because you're trying to get back in. So instead, we like to let some runners go, leave some contracts on, don't close it all out, and just manage that trade by moving your stop loss. And you can always close some as it goes. So, but we need to look at the larger time frame. I don't ever just come to my charts, sit down, plop it on a 3-minute time frame, and I'm here to trade. Got my coffee, my fingers warmed up, I'm ready to start buying or selling. We need to look at the larger time frame to decide on what might happen. So I like to do it on the weekend. So anytime over the weekend after the market's closed, you can do it Friday night, Saturday, Sunday, any time after the market closes Friday. Go out to the larger time frame, look at the charts, and dial it down. So I'm only going down and covering the 4-hour time frame right now tonight, and we'll look to see where things are at. And then if it doesn't matter if you trade Asian, London, US session before you sit down to take a trade. So this is good enough for a large directional, peeking out the large charts, looking for that possible direction. If you're going to trade Asian session tonight, well, things will move during the Asian session. So if you're going to trade the London session, you need to peek back out at the larger time frame. If you're going to wait and trade the US session, you definitely need to look at the larger time frames, because things will happen during the Asian session and London session, and you need to be aware of what's happened. You need to see those moves. So I'm going to do this now. This is not good enough for me in the morning. I can't just come down and go, well, I looked last night to see where things were, and I'm going to come into the US session here, 8:30 a.m. Eastern, and just start trading. I can't, because things will have happened during the Asian and London session. So I have to make myself aware of what has happened. And that helps stack the odds in your favor. That's what trading's all about. As many odds as you can stack in your favor, as much information as you can get off the higher time frames of where things may go, well, that will make you a better trader for one, but it will also prevent you from getting it kind of tossed around in the mix on the smaller time frame. Okay, so that's what we're going to go over, is from the 4-hour chart down, and we'll start with platinum, and then I'm going to run through about 13 instruments. I don't know how long this is going to be. Never gone through all 13 that we typically trade. So we've got people that trade metals. We've got other people that trade energies, indices, crypto, and then Forex is typically what people will trade in our Discord. And I'm going to go over all those as we look here. Not every single currency and not every single crypto. Bitcoin and Ethereum is all we're going to go over. Not every single metal. We go over gold and platinum because that's what most people are trading in there. Yes, there's some people trading copper and silver, but for the most part, it's gold and platinum. Okay, so let me jump on out to the charts and we'll get started. Okay, so platinum, you'll notice that I actually have this on a daily. Okay, and there's a reason why. If you look at the 4-hour, that's what the 4-hour looks like. That's as much information as I can squeeze on the screen. And I like it. I see that it's been in an uptrend. So instead of scrolling the chart back and looking to find out where this little uptrend line started, because we're actually past, or we passed that over in here. So what I want to do is actually go out, and we'll go out a higher time frame to the daily. The reason why I'm looking at the daily is if you look at the daily right now, what do you mainly see? Okay, big swing down, little swing up here, more sideways than anything. Okay, well, look what we had over here. I'm particularly looking at these lows in here, this more sideways movement in here. Yes, you're going to have some lows that are a little bit lower, but see these price level right here, hit over here. These lows are about with those lows. This price level, these two prices right here are about where these hit. So to me, I need to be aware of those particular price levels. Okay. So what I want to do is come in and draw a line, and I am going to label this as a daily low. That's where I got the time frame off the daily chart. Okay. So you could, well, daily low or daily support and resistance. And it's not going to let me tick that off there, is it? So we'll actually put daily SR level. I'm going to save this as a template because I don't have it in here as a template. All right, so we're going to save that in as a daily level. But I need to be aware of that particular price level because as we look over here, we've broken this trend line, and you want to look for areas where might it be heading to? Where could platinum be heading? Okay, so I need to be aware of that particular area. So here's where we are now on the 4-hour. Fix my chart. So we actually had a huge downward move the other day that we traded. Okay, it was nothing but down all day on Friday after non-farm. It was a great day to trade. We had a nice bearish move all the way down, not just in Bitcoin. And I know there's not a lot of people that actually trade it, but it actually did go through my 4-hour trend line. So this 4-hour trend line, I need to drag it now and move it here. I will only move a trend line when a new low or high is formed. All right, only, because here's where it was. That's where it was. It pulled down and broke it, but it pulled back up through it. Okay. And then it pulled down. Right now it's testing the top. So instead of moving it, I would rather draw another, but I'm not going to make you guys sit through the painstaking agony of me going out to my daily chart, 4-hour chart, and redrawing a line, dropping to a 4-hour, 60-minute, and a 15-minute, adjusting my lines. Because as you drop to it, once you draw something on a 4-hour time frame or any time frame, when you drop to a lower time frame, you have got to go back and look at your points, the 2 points you draw the line from, and you might possibly have to adjust that. Okay. You might have to adjust that. So right now it's pulled up and it's testing that line. So that's the only reason I say I would rather go out and draw one. Okay. So I'm going to leave it. But if I was moving it, that's where I'd move it. I'd move it to this low. So the point I'm trying to get across is the only time I look at a low to say, okay, it's a low, I could draw a trend line off that. Use that as my second point, or point A and B, if that's what you call them. The only time I could really call that low is once we started getting a green candle that pushed up and closed. Okay. Because of the fact that if you just move your line while this candle, picture if you had a trend line while this candle was red, and picture that being where the trend line was. If you moved it then, well, then it just, to you, it looked like it blew through it. Well, to someone else, it's like, no, that's just the downward move. We don't adjust our trend lines until we can call it a low or high. And in this case, a low. I can call this a low now because of the green candle. Okay. And that was from the other day. So going to the 4-hour, because we're still on a daily. I need the 4-hour. There we go. All right. So looking at the 4-hour, that's when we could put that new line. Once it came down and formed this low, basically once you got a pullback or got these green candles here, that's when you could say, okay, we have a low, and then you could draw a new level. I have several levels on here. So on the 4-hour time frame, we typically go look for zones and then our trend lines. This is an old down trend line we have on the chart. I've left it on. I left it on as long as it stayed under it. We had a break of that the other day. That was on Thursday that we had a break of that during the London session. And then it pulled up, found resistance here, 4-hour support and resistance level off of that swing. So when we mark these 4-hour time frame, zones and support resistance levels, we're looking for swings. So we're looking for a turn in the market on a 4-hour time frame. Because if the bullish side of the market and the bearish side of the market, the hedge funds, the banks, the companies, the countries that trade, they're trading with way more capital than we are. Okay. That's what moves the market. It's the market makers. That's what moves and turns the market. Okay. Well, it's not done on a 3-minute chart, 5, 15. It's not done on an hourly chart. They're not on an hourly chart trading. They're trading based off of price. The bullish side of the market has certain price levels that they will come in and buy at. The bearish side of the market will have certain price levels they will come in and sell at. And then there's also the profit side. Where do they take profit? So the bearish side of the market, or the bearish side of the market might sell up here. Well, where do they take profit? Because that's also going to make it swing. Okay. So what you have to realize is these countries and companies and hedge funds, and they're trading with such large capital, they actually make moves happen. So that being said, if they were to sell off here with large capital, where are they pulling profit? Okay, where are they closing out their position? Are they closing out here? And that's creating a pullback because now people are buying in there on smaller time frames, and then they come back and sell again. So again, larger time frames, you need to be aware of what's happening. So that's why that trend line stayed on there. It was drawn from up here to down here. We didn't break it till last Thursday. Okay. And then we've had nothing but on the break of that as well. And again, we're on the 4-hour time frame. You see that it also broke back up above that trend line and also a zone we had. So it was briefly down under. Did you make money there? Yes, we made some money shorting in there, but we never know how long it's going to last. All right. So it just basically pulled back up and hit this 4-hour support resistance level. I drew that off of that point. I also drew one in here. As we're day trading, we need to be aware of levels, price levels where things may hang up. They may not, actually get to and break. All right. So I just got an alert thing and I don't know what that was. Okay. So anyways, that's where we're at right now. We're back up above that 4-hour support and resistance line. Now I'm going to leave this zone yellow. You can turn this one back to green if you want. Okay. And you can make that your lower zone, turn it back green because that's where we're above. Okay. So you can either do that or you can leave it yellow because it is basically a midpoint between this low over here and where we currently are. Okay. Because it could break back down through this again and pop down here. Okay. And don't forget to go out on your 4-hour and daily and draw that new trend line. Keep this one here, I think, and then draw the new one from this low to on back, probably where this one started. All right. So we have an upper zone. We have a lower zone. Where's it heading? I don't know how to get that off, guys. Let me see. I want to get this off let me see if I can get this off the stream. Yeah, guys, I don't want that at all. I don't know how to get that off there. Bear with me. We have a clunky logo on here, and I don't know how to get it off there. Is that what you guys are seeing? I got it. Wow. All right. I didn't want that. That's new. I'll have to see if I can delete that somehow. Sorry about that. Thanks for mentioning that to me. Yeah, I must have accidentally. I don't know. They may have put it on there for some reason. So thanks for letting that. So right now it's between 2 points. All right, it's between, and let me know, guys, if these candles show up better. I did change the color of the candles from what I usually have. I like, mine are a little more subdued, I think, color-wise. I try to keep that, nice, mellow, subdued trading environment over here. And so I've changed them, though, because I think these show up better in the videos for you guys with the brighter candles and no color variation on the wicks and stuff. So right now it's between a couple zones. So really don't know which way it's going to head. Don't really care which way it's going to head. We're just going to look to trade it once we get lower lows, lower highs. So right now we're in the middle of 2 zones. So, and it's more to the high side. So if it stays up here and we're, here in about what, hour and 15 minutes while market open. So if it stays here and it kind of rolls off the top of this and we see lower low, lower high, I'm going to get in short it down. My target should be that trend line. Ultimately, it would be down here. Love to see that. Obviously, if you get in short, if it rounds over here and gives you lower low, lower high, and you get in short, you'd love to see it go down here with your runners. Don't know if that's going to happen, but that's your ultimate target. That's not where I'm pulling partial. I'm going to pull partial as it comes down to this 4-hour trend line. That's where I'm going to close part of my trade out. And then we'll leave some runners on. And as long as we keep seeing lower lows, lower highs, we'll hold those. If it breaks through this yellow zone, and the yellow zone's drawn on back from a 4-hour wick on a candle, but you can see it held up as support here. It's held up as support here on this pullback. It held up as a support level. So I need to be aware of that. So if it does happen to market open and we see higher highs, higher lows form, and it goes up through that zone, well, then obviously if it breaks out of the zone, I'm going to look to go long. And my first target, my pull partial, should be this 4-hour support and resistance level. Why should it be my 4-hour support and resistance level? Well, look at this swing back here. It swung up, breaking the trend line, went up through the zone, but where did it come to? It came back here. So it nailed that 4-hour support and resistance level off of here. This is old support level acting as new resistance. And then it pulled back down, hit the zone, bounced, but where'd it go to? If you're ignoring the wicks, because remember that's indecision during a 4-hour time frame. But the turn of the 4-hour candle happened at that 4-hour support and resistance level. So if it breaks and I get in long, I have to know in my mind, it may not go above this support and resistance level. It may do like it did here. Just tap it and then go back through. Okay. So that being said, I don't know if it's going to break the support resistance level like it did here on a smaller time frame and push to the next. That again, ultimate targets. That's my second target. That's my third target. This is my fourth target. I have targets in place off my zones. And the ones colored gray, they are just old green, yellow, and red ones. We only look for one below us that's green, and then a yellow 1 or 2. Typically, we only have one. In this case, I have 2 because that one I'm going to color back to yellow. And then a red up above because it may stay in that area and kind of ping pong around, bounce around. So we have the targets in place, but my pull partial should be there because I know you can imagine it going up, just hitting that level like here, just tapping it and then coming back down. Okay. So if we're in higher high and higher low though on a 4-hour time frame, swing up to make a higher high than back here, swing down to make a higher low than here, then if this plays out and it goes to the high side, we would expect it to push to a new high. The overall swing with some minor swings in between to the high side, which means that this should be my target, my main target. We had a higher high here, and then we'd want to see a higher high. That's where the runners come into play. But ultimately, I'm closing out partial there. All right. Let's reset that one. All right, so here's gold. We know it's been making all-time highs. I don't know if you guys ever peek out at the higher time frames, but you go out and look at the daily, you look at the 4-hour. Yep, gold's been going up. I remember I mentioned this before back in 2000. It was 11 or 12 when I was buying gold and silver off people. Gold was just hitting 1,000 back then. It was 11 or 12, just approaching 1,000, and all of us were talking: is it gonna break 1,000? You know, are we going to get there? We're going to see it break 1,000. And here we are, 2,500's where we've hit. It was actually like 2,560, I think, is our high. So we know it's been in an uptrend. So, gold is one of those things as well that trades more off price. Any of your, you can draw trend lines on these, your metals, but they're based off price. That's pretty plain and simple. So you can draw the trend lines. If we see something trending, we want to draw a trend line and then trade that. However, these are more price-based, especially gold and platinum in here. Okay. So let me kind of zoom in. All right. So here's where we are overall. Again, that's the 4-hour. And we actually had zones we were trading in here. I don't know where my upper zone just went. Guys, I have an upper zone up there. We did. Let me redraw that in. Sometimes that'll happen to me as I'm cleaning out charts on the weekend or redrawing. So this was our upper. That's the highest it's ever been. Okay, so we color that red as an upper zone, because if it goes back up to there, we're going to think sell. Okay, yes, it could pop through and make a higher high, but overall, if it gets way back up here, I'm going to be thinking sell. I'm going to look to short, especially if it turns under that zone and starts pushing down. That's what we had here. So that high there is like, I think it's 25.60, 80, 70, somewhere in there. 25.70. You'd have to look at the price point, somewhere in there. But look at these pullbacks here. It pulled back and fell short of getting to that level. That's the 25.60 I was talking about. 25.60, 61. It pulled back down, made another run up, fell short of getting to this high. Pulled back down, another run up, fell short. And then this one, shorter still. So you've had several times it's tried to get back to that level and it couldn't. So that's why you need to be aware of these points. I don't want to trade and this line not be there. I just don't. Because I know that as the market moves, it may only go back to there. So I need to be aware of that. So I'm not on a 4-hour trading though. So definitely label that line as a 4-hour support resistance level, because that's where we got it. And if it pulls back up to that area, you have to know it might not make it all the way up. It might start turning around. So if it keeps making higher highs, higher lows, we think, okay, go to that level. Still make higher highs, higher lows. Well, it's going through that level. Once at any of them points, it starts making lower lows, lower highs, then we're looking to get in short. Okay. So again, we're on the 1 hour now. We're not even on the 4. We're down on the 1. And right now it is between two price levels. Okay. And we typically get this. We get big pushes during the sessions. And right here is the 12 p.m. candle. This is Friday. So we saw this push down. We traded gold short. We were in gold short pretty much all day Friday. And then it actually, around lunchtime, we started seeing that push back up. So it had a decent retracement so far. Right now, as you look at that chart, do you know which direction it's going? I don't. I really don't. I can't tell you if tonight when market opens, if it's going to continue in this retracement and go all the way up to this other zone, which this is a 1 hour. That's a smaller time frame zone that I drew off of this bounce here. It pulled down, wick, pulled back up. So that's something I drew. And guys, I drew that before. I know I posted a chart on it, but that was drawn Friday morning before non-farm. So was this red one. Now, this gray one was already, that was drawn from up above. But those zones were drawn Friday right before non-farm. Okay. And then non-farm whipped back and forth. And then we saw lower low and highs formed and got in short and pretty much rode the whole day. And we had some good pullbacks on it. Okay. So it went short, bounced at a 4-hour zone. And when you draw these 4-hour zones, you can change them. Here's what I want to go over by that. So I already have one down here that's gray. This 4-hour zone is drawn from a while back. I don't want you to get too many on the chart because you can get too many. So this 4-hour zone is drawn from back here. That's where it pulled to and kind of turned when we're down on the 60-minute. But don't be afraid to erase your zones if it's on in the past and look for newer ones. Okay. And that's what, I don't want to do that. Let me go back to the 60. That's what I kind of did in here on the 60 before the market opened. I looked as it was in here, okay, before non-farm. Then basically this is the London session. Here's early morning London session. So you see it tapping out there at the red zone. Well, I went and drew this one off the 1 hour, and then we had the two above. And that's what I wanted. I wanted some tighter zones to say, okay, non-farm, let's see what you're going to do with these, because these are possible areas that it may turn. Since this one was green down here, I colored that one yellow. That was my mid zone if it went short. If it went long, I was expecting it to go where? The all-time highs. Those two levels. And it kind of peaked up there right before non-farm. Popped up, or right during. Went up, pulled back down. Stayed under this high. But non-farm will do that. It took out everybody that was, there were people that were in long, got in long here when it broke because they're trading news. And if they didn't pull partial, they were stopped out. There were people that got in short here during London session, or the first, let's say, an hour or two before the US session, and got in long, or got in short, sorry, thinking, okay, it's bounced at this level, it's not going to go back, I'll get in short. And then whipped up, hit those stops, and then went on. So that's part of the problem with trading news. I don't recommend, I love to get in before news. If I can, I like to get in before news, but I just want to have a runner on, or a couple runners. I don't want to get in a full-blown trade before news. So if I get in before news, if I can go in there, and non-farm comes out at 8:30 every month. It's not a surprise. Once a month, every month, 8:30. If you're going to trade non-farm, I recommend journaling this and keeping track of it separate. It's a separate trading strategy. Do not group this in with your normal trading. News trading, and I'm talking even trading after news, it should be journaled separate. 100%. Firm believer in that. There's 12 times it comes out in a year. So keep a spreadsheet. I do most of my stuff on a spreadsheet. So keep a spreadsheet if you want. And if you traded it Friday, how did that work for you? And write that down. Take a picture of the like half hour before non-farm and half hour after. Let me go down. So take a screenshot of what it looks like before and after non-farm, and put that in your spreadsheet. If you keep a hard 3-ring binder, print a picture, and don't print with a black background. That'll use all your black ink. Change it to white. That's just a little helpful advice. Anyways, keep these separate. Look at that picture. Did you trade it? Did not? Did you get in before it? What happened? Because like I said, anyone who shorted that because it's below a zone, and it's below a previous high, who had shorts on and had their stop up above that past high off to the left, they got taken out. They got stopped out, and then it only moved short. Well, I waited because I know what non-farm does. I know how wicked it could be, and I know that it's going to go back and forth and whip up and down. And that right there is a 5-minute candle. So that being said, I like to watch them on a 1 minute. I like to go down to a 1-minute watch. And I don't want to do a whole recap on non-farm because I did a video. Well, we did it. Did I do the video? Not live while we were trading, but I went and did kind of a recap video on gold and Bitcoin as I traded them. And they also have the price points. So it's out on YouTube somewhere. But actually, as we traded it, then I marked those levels as well. Okay. So take a screenshot of it and then look at that as a whole. So if you decide to trade it, yep, you say, I want to trade non-farm. I want to start doing that. Next month, in October, I'm going to start trading. Make a conscious decision, do it for a year. I recommend do it for a year. 6 months at least, but do it for a year in a demo environment. demo trade it. Say to your, and you have to make up the rules. Everybody is different. Some people wait 5 or 10, 15 minutes. Some people wait half an hour before they start looking to get in. Some people wait an hour, which means you're waiting on the stock market to open, U.S. stock market at 9:30. So you have to decide that for yourself. Are you going to try and find an entry beforehand, knowing that you might be stopped out? If so, trade lightly. If you normally trade with 10 contracts, don't put on 10 contracts. Put on 1 or put on 2 if you're going to do that. If you had your stop above this zone and above this trend line here, old one, you'd have probably been taken out because your stop would have been probably down in here if you got in short. Okay, so you were stopped out only to see it go short after you got stopped out. So that's why I say, but go in lightly. Don't put up that much risk before a news release. And again, some people wait 5, 10, 15, 30 minutes after, and some wait a full hour. That is something you will have to look at. And if you've never looked at non-farm in your life, it comes out every month. You can go look at the calendar and see what actual day it came out in January, February, March on down. Go back, because if you're using TradingView, it has a wonderful replay. Hit the replay and go down, select your date and time. And I recommend selecting 5 minutes before the non-farm. So you would select the date and select the time of 8:25 a.m. Eastern. That takes you back 5 minutes before non-farm. Put it on a 1 minute time frame and tick it over. But before you do that, decide, would I trade this? When would I look for my entry? Everybody's different. And that has to do with your trade and risk tolerance. Your risk tolerance on your trades, your account management, all that. So decide those first, go back and look, and then demo. You can do it through the replay if you want, and just do the replay of it. I'm fine with that. Look at the replays and go, you know what? I'm going to wait for half hour in and then tick over. And you could do a 5 minute candle, because if you do a 1 minute, you're going to be ticking over candle by candle, and you're going to have 30 candles in there to tick over before half hour after. If you wait an hour, I would definitely use a 5. But look at the time frame and then just trade at that time. Look at your entries, look at your bounces. It's a good way to practice. And then if you decide, yep, I'm doing non-farm, then just journal it separate. Okay. So right now on a 5, and let me jump back out, but right now we're in the middle. We're between 2 zones. So I don't know how the market's going to open. That remains to be seen. I don't like getting caught up in that. That adds extra risk to my trades. Why would I add extra risk to my trade entry if I don't have to? Okay. So some people are sitting around on Sunday and they're waiting for the market to open. And when it opens, let's say it pops the high side. Well, then they'll get in long, trading it to the zone. And it may just come back down. I'm not going to get caught up in that. I would rather see it, where's it going now? I know right now it's pretty much closed around that high area. Is it going to open above that? Is it going to open below that? I really don't know. I need to see structure build. I don't want to get caught up in that part of the market where we don't know where we're going, but we're in here trading anyways, and we're hoping for the best. And then later something will set up and you'll kick yourself because you're in here trading right when market opens. You'll take some trades. They'll be losing trades. You're throwing money away right at the beginning of the week. That's not me. If you want to trade that way, don't risk much. Better not put on a full 10 or 20 or whatever you trade with. I wouldn't. And then it should be bonus money from the week before. You should not trade with your capital you're locking in. So whatever you need to make a living off of, don't dip into that capital, what you made last week. If you're going to get into riskier trade, it should be off bonus money. All right. So right now, I don't know which way it's going to go. So we're going to wait for the market to open, I don't really care which way it goes. I don't care if it goes long. I don't care if it goes short. If it comes short and taps in this zone somewhere or even below it a little, I'm going to look for it to build higher, high, higher, low, bounce off that. Then I'll get in long. If it comes up to this mid zone and it starts rounding over, forms lower, low, lower, high, I'll get in short, target down here. We're using our zones as the opposite target. If it moves up, it's going to be doing what? If it moves up, it's going to be forming higher highs and higher lows. Okay, that's bullish formation, bullish structure. So if it moves up, I'm fine with that. Higher highs, higher lows. Again, if it starts rounding over here and forms a lower low, lower high, I'm in short down to here. With my pull partial right where it is. And if you look at that, if I do get in short, that should be around where I should close partial. Only because look at how, as it's pulled up here, it's respected that particular price level. Every one of those bounces respected it. Okay, right now we don't know. If it pulls down below it and heads back down, well, then we know, okay, that is definitely. But right now, to me, that should be my mid target. So if it pulls down here, rounds over, gives me higher, 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 low, I'm in. Pulling partial here, letting runners go in case it goes here, or better yet, up to here. If it goes up to the yellow, it's forming higher highs, higher lows, starts rounding over, lower low, lower high. I'm in short, pulling partial here, letting runners go in case it hits here, or mid zone, or here, or even down here. That's my plan. Now, if it's going long, and again, if I start seeing structure in here, I don't know that I want to get caught up in that. So if it goes up market open and we see higher highs and higher lows form, and they're just right there at the zone, I would not get in long right there. I would have to wait till it breaks through the yellow zone, pulls up and comes back, because look at how this zone was respected here. So this may hold up as resistance. So those are my 3 trade plans on this. That's how I'm looking to trade it. If it goes up here, and again, I've already mentioned it, so I'm not really going to draw it in. I guess I can. If I see lower low, lower high form, then I'm going to get in and trade it. There's my pull partial right here. And there's where I'm going to, that's my main target. And then it could go through to here, here, or on down. Okay, not saying it's going to go all that way, but why would I get out of a trade? So if I close out part of my trade and let runners go, and it could bounce in here a little bit and then go through, I don't care, I'll run it because my stop will be out of the way. But if it continues on down through, why would I want to miss that? So that's why I don't want to close out all my trade here. That's why we leave the partials on. That's bonus money. And if it just keeps going, well, then we'll have 2, 3, 4, 500 or 1,000 on an extra trade, a bonus. That's, basically trade plan 1. If it comes down, and it could form lower low, lower high in here, what I'm looking for there is a bounce. It could bounce here. It could pull deeper and bounce here, or it could pull deeper and bounce here. But if it bounces and I get a test of that level, then I'm going to get in long. My target to close partials here. That's runner target. If it gets up near here, I would close out one of my runners, move my stop. If it gets above the zone, I'm going to look to close out a runner, move my stop. And ultimately, if it keeps going, well, I'm in. I'm just in on the runner. Okay, again, this is how you got to kind of look at your trade plan. You need backup plan. It's great to have one trade plan, but it's even better to have a backup plan. So I don't know, guys, it's the same as going to work anywhere or anything else. If here's the thing. I was in construction remodeling forever. Built houses, remodeled houses, I flipped houses. On a flip, I sub most everything out. Of guys that would work for me, I don't even have that side of the company going anymore. I just sub everything out. So that being said, if a subcontractor, I have one subcontractor. That is my plan. I put that subcontractor in the house to remodel it, get it done in 30 days. I put it on the market, 30-day flip. Love it. So I have a subcontractor that he pretty much does everything. There's a few things he doesn't do. Roofing. Well, I have a sub for that. That's been with me since 2016. That I only use him for roofing, and he does phenomenal. They're in and out. There's 6 guys, and they're in and out in a half a day to a day. So that's my plan. My plan on roofing on a flip is I use Orlando. Well, if Orlando's busy, got to have backup. I've got a backup too. So that means that I have to take my subcontractor and the other roofer and give him a job once in a while just to keep him working for me. But that's my backup plan. So any business you're in, and trading's a business, you should have a backup plan. So you want to look and say, okay, if it does this, I don't know who maybe it's MC. Someone keeps mentioning there, it's that if then. You're running if then scenarios. You know, if it comes up here, starts rounding over, I see lower low, lower high, then I'm going to get in short, close partial here. If it keeps running, I'm going to have my runners on, and as it goes, I will close out another runner as it goes, gives me that further out profit, and move my stop. If it pulls short to the zone, I'm not going to do anything when it taps the top of the zone. I won't do a thing just because price comes down and taps it. Because can you imagine if it comes down and taps this price, and you're the type of trader that's your reaction. That's your trade plan. When it comes down and taps a zone or a support resistance level, like right now, it tapped that. If you were that reactional trader, then as soon as market opens, you would short it. Well, what if it keeps going long? Then you're in the negative or getting stopped out. So I don't ever want to trade just because it touches one of my price levels. I need to see a high and a low build off this first, because if I get in short just because it touched, my stop should be below the zone, but it's creeped below the zone. So your stop should definitely be there. Well, I'm not going to sit through that. I don't want to sit through all that negative pullback. So wait for it to start rounding over, wait for a higher high, higher low. Well, our third trade plan, and also, what if it goes below this zone, you know, breaking that low? What if it comes down and breaks that low, pulls back and bounces? Okay. And then the other would be, and I know it's a lot, you're going, man, that's like 4 trade plans. What if it does something like this? This is what you have to do. That's why I recommend always, especially if you're new to trading, focus on one thing. That right there is how I'm set up for gold. And I think now you guys hopefully see why at the start or before the U.S. market, my main focus is gold and oil. That's why I need to see a setup, see where it's at. Get in gold and oil, then look at platinum, ES, and Nasdaq, and wait for Nasdaq and ES market to open. Okay, so that's gold right there. That should be your 4 trade plans. Now on these, I'm not going to dial down on all these because, but that's how you need to prepare on every one of these. Okay, is go down and do that same analysis. I want to cover a bunch of instruments now because we're going through the Forex stuff as well, the currency pairs, and then the other indices as well. So oil overall main uptrend. If you go back, we could pop to a daily. I have an uptrend line there. I have a downtrend line. I don't care really to go back here. I know if I draw one from here to here, that got broken here. So I know that if I draw one from here, I'd have to bring it way out here to there. So I'm really not interested in that line because this line should hold us down. That should be enough to hold us down. Okay, so that's out on the daily. So we look at the 4 hour. We know it's been in an uptrend. Overall is the major bias. However, we've been pulling down off this trend line. So we can trade short. I'm not going to wait for a trend line to break before I get in because it may be forever before it breaks this one to go long. We just had it break through this one to go short. All right. I just started using that tool. So there you go. All right, let me size it up here. So overall, again, we short if it bounces off of trend lines. Now I have one that's a little more aggressive. It's not that one out there from the longer time frame. I'm still on the 4 hour time frame, but this downtrend line is from the point up here to this point. And then when it pulled up here, it respected it and kept going down. So what we see is we see a nice trend down. And I left this trend line on there, obviously, for a reason, because it was respected here as it pulled down. It pulled down to a 4 hour zone, which is off here. And that used to be green. So when it started forming higher highs and higher lows, you could trade the retracement if there is room. So I don't like missing out on moves, but I don't like getting in them if there's not a lot of room. So on the smaller time frame, as it pulled down and got in here into this zone, and then on the smaller time frame, you see a higher high and higher low form. You can trade it long. It's called retracement trading, and you're trading basically a retracement off a 4 hour time frame. That's all this was. At start, it was a retracement off 4 hour time frame. Well, then it broke through this support resistance level, pulled back up to tap that line. And when it tapped that line, you're looking for lower lows, lower highs. You don't see this over here. You don't see this. But it came back up to tap the trend line, starts rolling over, lower lows, lower highs. They think, okay, possible short. Here's our short. And you can get in short, trading back to there. However, it just didn't. It broke through the trend line. So then if you're in short here, you have to reverse your direction. Hopefully, you got lower low, lower high. You got in, you were able to trade short and get something. So don't be afraid to trade this turnaround and pull back on the 4 hour time frame, because most of us are. We're down on the 3 or 5 minute, and we're actually trading that back. But you need those lines to know how far it may go. Okay? And it may not go further. Like over here on this turnaround, you know, we're as it comes down here and came down to test this low area. Again, we're on a 5 minute time frame. So I can guarantee you go down to a 5, you see higher high and higher low in here. Well, can we go long? How far is your target? Is your first question. How far is your trend line? How far is your zone, your last high? Well, let's peek out at the 4 hour. And if you draw all this on the 4 hour, you don't need to peek out, because this, you know, is your trend line on a 4 hour. So you look at that higher high, higher low on a 5 or 3, and you say, yeah, I should be able to make some profit on that. My trend line's way out here. My previous high is marked by a zone. So look for both those areas, like extra confirmation when it goes up and turns, and then starts to pull down. I'm looking at the screen because I don't know why it just flashed over. So right now, as we look, it's below that 4 hour. This thicker line is the 4 hour uptrend line. Okay, I never moved it out. I don't even think I can get to point B here. It's on back. So I'm going to have to go out and move it, and point B is on back. So I won't make you guys sit through that. But just know that right now, this 4 hour uptrend line, that should be pushed out here, and then you could technically push it out here because we had a nice red candle go in green. So that needs moved on out to here. So definitely move it, or add one and leave this and make it dashed. I'm fine if you leave them, just make it dashed is what I like to do. But make sure that your other one comes out here. And then we also have this zone drawn off 4 hour time frame. So where's it going to go? Again, don't know. We're going to wait till market opens, but overall it's in between two zones. You'll typically never find it right out of zone. Sometimes we do. We find it right out of zone, but sometimes we don't at market open. So overall, I'm going to be looking on a lower time frame for it to settle into some sort of formation. Is the market going to open tonight and, oil's going to be down here? Is it going to track down to the zone? Is it going to track down, round over, and then give me lower low, lower high, or higher high, higher low, sorry, in here? I mean, is that the way it's going to track and then bounce? Oh, it's wanting to tick me over 4 hours. I got to turn the magnet off on this. I mean, is that what we're going to see? And then could it even blow through to that level? Or is the market going to open and it's going to continue to track up? And go to that zone. So ultimately, I'm not getting in this either. It's surprising that on a Sunday night, I'm not going to get into anything. Well, that's a horrible drawing. It's hard to draw on the 4 hour, evidently. It's attaching to the candle still, even though I turned the magnet thing off. So ultimately, I don't know which way it's going to go. I don't really care. And I think you guys can see why this zone's here, this red one. If you look, 4 hour candle turned right there, stopped there. This one did not even try and push through that. That bullish candle right there did not try and push through it. All it did was pull back to test that old trend line. Okay. So overall, I'm waiting. If it goes back up to that zone, I'm going to look for it to round over. If it blows through the zone, got to be careful because of a 4 hour trend line. So I would be careful. If it comes up and breaks this red zone and pulls down, and you just got to be careful because you have multiple areas of resistance. We have a 4 hour uptrend line. We have a 4 hour zone. We have the old 4 hour downtrend line. So I'm going to be cautious in there. If it blows through this one, well, the gates are open. Okay. If it blows up through all these levels, if it were to blow through all those and come back and test this, I'm going to get long. My first pull profit should be this candle high. So I'd want to come in and mark that as a 4 hour. But that should be, that right there should be my target as a pull partial. Is that high? And then if it keeps going, well, we're in on runners. Okay. All right, so here's gas. I'm just going to go over this real quick. I don't know anybody that trades gas, but I was looking at it and I like where I saw it. I love where it is right now. So to me, it's in more of a zone between my, the high box here and the low one. So if you are to trade it, does anyone in here even trade natural gas? I don't know, guys. I just like where it's sitting. So right now it's kind of in between, but all I did was go in on the 4 hour and basically see this in here, and I drew several support and resistance levels. And you could just see like this lower support and resistance level, that's not where I drew it from. That's what I first saw. So I always look for confirmation in these, or try to find confirmation in these zones that I draw. So when I look to the left, that's obvious. I see this low point. I see this low point. I see this low point. I can see where it's at now. So to me, that one stuck out. Okay, because I like to find a few levels between our zones. So that level stuck out like a sore thumb. And I looked over to the left and I thought, well, it basically pulled down and turned there before. So let me mark it back here. So to me, that has, I don't know if you want to look at multiple touches. Here's one time it hit that price level, 2 times it hits that price level and turns. We're looking at where it hits it and turn. We don't really care here so much. It briefly pulled back to test it. So that's another confirmation. So if you need to, you can even label your line. Just put 4-hour support and resistance and put 2 turns, 2 touches, and just put, 2 touches on it. And again, the reason why would I want to do that? Well, I'm not going to be watching on a 4-hour time frame. If I'm trading this, it's going to be done on a 5 or a 3 or a 10. I love entering on a 3, right? So I like entering on a 3, and then as it's trending and I have runners on, I love dialing it out to a 5 or a 10, and then adjusting my stops off those highs and lows on a 5 or a 10. And then if you can go out to the higher time frame like that and let them run, then you could be in something for a few days, a few weeks or a few days. Why is that not showing up either? All right. So, and then I didn't really necessarily like that one so close to the other anyways, but it could be a price level. I was kind of looking because of this bounce. I'd actually rather draw it off that. And then this 4-hour came from back in here. So basically large swing down, it nailed that level several times. I was like, okay, it basically stopped it from going any further for a while, because these are 4-hour candles, okay, which it could equate to what? A day or two. So nice swing down, and for a day or two, it was held up by that level. I definitely want to be aware of that, okay? This one right here, just below where we're at, isn't drawn off of these wicks. It's drawn back here off the turn. I'm looking for the 4-hour turning points. I'd like to see the 4-hour turning points as it's heading one direction, like this one and down here off of the swing as it moves up. So those I really like to mark. This is kind of let's look for a mid-level, because before this one was here, you had where it is now, and then I had this one down here, and that's it. Well, there's a lot of room in there, okay? And then above, I basically was trying to find a level, and it's back over here. It's on back. I won't zoom all the way over, but on back there, and you'll see where it kind of swung down, respected that level. This swing up respected that level. So I was looking for a price point between this and the zone. And then I have to be aware of the highs and the candle turns. So again, we're looking at a 4-hour candle. There were several times, 1, 2, 3 times, that during the 4-hour time frame, if you're down on a smaller chart, you'd see candles. If you're on a 5 or 3, you actually see candles push it all the way up to the zone. But when you look at the 4-hour, you see that they're just wicks. So I was looking for this line as bodies. Now you could go there, you could go here. Actually, I like that one better. But I put it back here so you could see multiple times where the candles closed at around that price level. There's 1, 2, 3, 4. So I need to be aware of that particular price point. Okay. And again, if you want to go in and we can relabel this one, I'll take level off there. And we'll just put I'm going to put 4 touch body close, because I'll remember then. 4-hour support resistance level. Why? because there was four times it touched and the body's closed at that price level. So to me, I need to be aware of that level. So if we are in long and it starts trending up, I have to know when it gets to that price level, if I start to see it flatten out, move sideways, it may be done. It could still pull up into that zone. Okay. So I would peek out at the 4 hour. And something I want to mention, I don't think anyone does this. I think this might be helpful for a lot of you guys that are looking at the 4 hour time frame, which you should. I think it would be helpful if you peek out every time a 4 hour candle closes. Just peek out. Even if you're day trading, we're getting in on a 3, 5, 10. Some of us trading an hour. But I think it would be helpful if when every 4 hour candle closes, take your chart and go out to the 4 hour and see how that candle closed. I think that might be helpful to a lot of people, is just peek back out and just get a recap kind of at a 4 hour chart. Okay. All right. So now we get into the indices. So I know a lot of people are trading Nasdaq, S&P, Nasdaq, Russell, the Dow. Those are typically the four that are traded. I remember when we were here trading back and forth between those zones. I'd love to be back in something like that again. However, we're not. It's kind of in a free for fall. So we've had downward moves. This was trending the other day, and trying to look at the candle we got in on. Some of us did. It started trending last week. It started moving short, and this is why you have to leave runners on. Every time it pulled to the top of the zone, we shorted, pulled back, shorted, pulled back, shorted, shorted, shorted. If you leave runners on, you can get in on this further push. Okay, now typically that's going to depend on when your broker closes. If you have to close out trades, you're not holding all the way through down to here. If you have to hold out and you have to get back in, that's just unfortunate of the broker you trade through. If you're trading with funded accounts, I haven't found one that lets you hold. I don't know, there might be. That lets you hold long term. If so, I think you have to throw real money at them or something. I don't know. So it's basically heading short. So I want to trade with that bias. It's pushing short. We've had strong pushes down. So right now, 4 hour time frame, it's kind of hanging out between two zones. I also have the down trend line here. It's drawn off that high to that high. So we've had a real strong push here. I don't know, again, where the market's going to open. We'll have to look and see how it opens. Is it going to pull back to this zone, and our down trend line, or even pop through a little bit, and then pull down? Because I can see where this held up as support here. So it could pull back up to that price point, the top of the zone. And then if it starts rounding over in there, lower lows, lower highs, I'm going to look to short. Main target down here, that's a big distance. So I need to come back and look to the left of the chart. I would draw one off of this swing here. You could have one down here. If I draw one right there, if I look to the left, what do I see? A couple candles. I would put it there. And then I want one even closer. So I'd look to draw one about up in here. Actually, I'd take it a little bit higher, maybe this wick. I'm basically looking for some kind of price points where it may take a breath for a while. It may stop, may hang out, may move sideways for a while, may pull back off of. I need to be aware of a few levels. I don't just want to get in and think that it's just going to swing down. I mean, that would be lovely just to get in it short now and it goes all the way down. However, don't know that that's going to happen. And I know the market moves in waves, and I know that it pulls back to test levels. So knowing all that information, as you think about it, Okay, it's pulled down to kind of hit this area. Don't know where the market's going to open, but I could see it pulling back to test that zone, to test that downtrend, or even pulling back up into the top of the zone to test that as well. All right. So I like to wait. I don't like to trade. Indices, I have traded some at night. I won't get in them right when the market opens at all, any day. Just unless I'm in a trade. If I'm in a trade through the week, so let's say tomorrow I'm in a trade and I'm short ES and I have to close out at 5 through my broker. At 6, if I'm still in, it looks good before 5 and I close, we're still making lower lows, lower highs, I will pop on a trade at 6 to go short. I have done that before to carry over the trade. I don't always do it though. It just depends on where that's at 5 o'clock. So I like to trade the indices when the stock market's open. I mean, that's when you expect more volume to come in. I don't expect huge volume to come in always at night. So I like the day volume. When the stock market opens, that's when I should see huge volume. That's when I should see some volatility. That's when I should see some movement. Okay. So is the US stock market. So that being said, what I'm showing you now in these indices, I don't plan on trading them until tomorrow morning. So this will change because it's not going to sit here till tomorrow morning. It just won't. So as we look at the 4-hour time frame now, what we're looking at is what could happen tonight during Asian and London session? Where could it be set up? So even though I'm out looking now, my analysis, weekend analysis on these indices is kind of short because I don't really know how it's going to set up by tomorrow morning. And I don't recommend trading these except for high volume hours. So that being said, these I don't look to trade till 9:30 a.m. Eastern. That's when the US stock market opens. Like to see it open for a few minutes, like to see where things start heading. If you get an A+ or 100% setup, sure, take it. That's what we're looking for. So on the indices, it's going to be kind of quick on theirs because really we're not looking to trade it. Here's where we are right now. Mark out your support and resistance levels. Now I'm on a 4-hour time frame. 4-hour time frame. So these are actually 4-hour candles. But when you dial down to a 60-minute, you'll notice that my support and resistance levels, we'll catch you tomorrow, Bradley. These support and resistance levels say 1 hour because that was a 1-hour turn. It's a 4-hour too, but I was down on the 1-hour marking some stuff. So I could change that over to 4-hour. I'm going to leave it as a 1. So you can mark them as you want, but these were actually drawn off the 1 hour, and it's not going to change. I mean, if I go to a 60-minute, you're going to see that's the basically that turning point right there. That's all it is. But see how I found this inner one in here? So that's all I'm doing is marking something a little bit tighter time frame because I want to be aware. So overall on it though, we had a nice downtrend over here. And this trend line that's right here was originally drawn off of this point up here to that point. That's what it was drawn off of. Kind of peeked through a little, so I moved it. The point B is right there off that high. So it came down, broke through. Well, when it broke through, it tested the backside, pulled up to a 4-hour zone. And then, as you could see, it's making higher highs, higher lows on the way up, touched that price point, and dropped like a rock. And that's definitely, when it started pulling back, definitely lower low than here. And it dropped through a red zone, dropped through our major swing zone off of here. Pulled back through to test it, as it often happens. Pulled down, and then this pushed down, lower low, and this was a lower high, Well, then it came back to test our zone again, and the zone held up. Kind of like, if you look, these swings right here, looks kind of identical to that. So we were shortening off the bottom of the zone, push down, close partial, leave your runners on. Your runners, you're moving your stop. Eventually, you're going to get stopped out. Every time it pushed to the zone, you're trading short. Push to the zone, you're trading short. And then this short pans out where it goes. And then it just bounces off of this zone that's on from the way back. So right now, it's in the same place. And as you look at ES, Nasdaq, Dow, S&P and Dow and the Russell and Nasdaq, those four, you're going to see similar moves on them. This chart looks about identical to this one, to ES, as to where it's at. It's not going to be exact. And I could come in here and draw this too, right here. That's a swing low. So that should be a 4-hour mark. So again, they look kind of identical, but they're going to look similar. And you just have to pick one. And if you want to pick one and trade it, I recommend looking at all four. Same thing. Just go out and mark your 4-hour support resistance levels. Again, I'm not going to be covering too much on this because I'm waiting. I don't recommend anybody trading these off hours. Some people do. If you do, let me know how it goes. It would have to be that 100% setup for me. I do look at them. I don't stare at them during Asian session. Asian session for me is gold. That's about all I look at. Now, oil, I'm pretty heavy on oil, and I love trading oil. One of the main reasons, because I love trading the Canadian dollar. And guess what's tied to the Canadian dollar pretty heavily? That would be oil. We get a lot of oil from Canada. It's always been that way. So oil and the Canadian dollar, you'll see good movements off both of them at the same time. And I love trading the Canadian dollar, especially off news. And oil moves as well. So right now, on the Russell, same between zones. I'm going to be looking for the bounces. Not going to be in anything tonight. I'm going to look and see what happens tonight. I might peek out later to kind of see, but it really doesn't matter what happens. I can look out at 10 o'clock tonight and see where, Nasdaq, S&P, Russell, and Dow, where they're at. I can look at 10 o'clock tonight, see where they're at. But how does that help me when I'm going to get up at 9:30 to trade them? If I don't trade them until the U.S. stock market opens, it really does not help me to look right now. And that's typically why we won't go over all these, because you shouldn't be trading them off hours, off market hours. So I just recommend sticking to the market hours, the first 2 to 3 hours, because that's when, again, volume steps in. That's when the market makers step in. That's when you're going to get those big orders flow. So I want to be on the winning side. So I want to stack the odds in my favor. If I trade right now when market opens, odds are not in my favor. I mean, literally, if I wait till 6 o'clock and jump in trades, odds are not in my favor. I'm not stacking in my favor. I'm just 50-50 trading. Right now, I have no idea which way this goes. So if I see it pop up and I go long, if I see it pop down, I go short, or if I see it pop up and then go short, trading the gap, or see it pop down and trade long, trading the gap that's opened up, those are riskier trades. So if I'm going to try something like that, am I going to trade full contract size? No, there's no way. Those are riskier trades to me. If I'm going to try it, first of all, your first instinct should be, if you want to do gap trading, because there is such a thing, and it's been done. We used to do it in the Forex market. It happens I'd only do it on Sundays, but it's riskier trades. So if you're going to do it, less contracts, less lots. Don't throw your full thing, but you should demo it. And that happens every Sunday, 52 weeks out of the year. So guess what? I'm going to tell you to demo trade it at least 6 months, or go back and replay it. but I don't recommend it. Not in anything unless you're doing it in Forex. That's just because I know how it trades in Forex. So again, don't know what's going to happen with it. I could look now and come out with all the scenarios. Well, if it pulls down to this zone, starts flattening out, higher high, higher low, is there enough room to this down trend line to make profit? If it comes down and moves sideways, find support in here, top of the zone, mid zone, bottom, I don't care. If it pulls down there and starts flattening out, rounding over, see higher high, higher low, my first question should be, is there enough profit at this trend line? Is that target enough to close partial? If it is, then okay, I can get in and I might want to go light, because the ultimate trade is it's going short. It's been short. So I want to trade in that direction. I don't really want to trade it long. But if it comes in and finds support, can you trade the retracements? 100%. You can trade if it starts giving you a higher high, higher low, and it's basically tracking back to that trend line. That's called a retracement or pullback. Can you trade the retracement or pullback? Yes. The main trend is down. We've been bearish for days. When did this start? This was the 3rd. So it was last Tuesday. Last Tuesday, it broke this trend line. This trend line's drawn from there to there. So it broke through last Tuesday. So since last Tuesday, that's definitely a bearish push. Just hung out for a while. Definite bearish push. So I want to trade with that momentum. Right now, the momentum is bearish. So again, I don't know if it's going to pull to the zone. If it does, starts pulling off higher high, higher low. First question, is there enough room for me to pull partial around this level? And the only reason I'm pointing right there is because that's where Friday closed. That's Friday's close. So is there enough room from where it turns here up? If there is, then you're going to trade that retracement. It is a riskier trade, first off, because trading with the trend should be bearish. So less contracts. I'm fine with that. Less contracts. If it breaks this, if you are in long and it happens to break this line, well, guess what? If it pulls back to test down in here somewhere, you could see a change in direction. We would need to see higher highs, higher lows set up over here. And then we could be in long. But I don't always get it. I don't get in right when a trend line's broke. So on a smaller time frame, we'll see a break and we need to see higher highs, higher lows. It could, when market opens, pulls back to this 4 hour. That's what I'd rather see. I would much rather see this. Right. And it's going to move in waves. I'd much rather see it go right there. That's what I would love to see. So I'm going to leave the arrows on my charts and we'll see what happens. So if it comes back to that downtrend line and this 4 hour support resistance, and that's why you need both. That's why this is how I was taught. I was taught 4 hour analysis and then go to a 60, go to a 15. I actually was doing this on a daily 4 hour, 60, trade on a 15. That's how I was taught. Well, the 15-minute time frame is nothing to watch. It is not exciting at all. I got very bored. So I just dialed it down and was looking at like a 10, then I went to a 5. So that led me to go to a 4 hour, 60-minute, 15-minute for analysis, and then I'm in on a 5 or 3. So, but you need to be aware of not just your trend lines. You have to look at support and resistance levels. These are price levels that the bullish and bearish side of the market has agreed on a price, basically. So you look back here at that swing right there, bounce there, bounce there. We're under it right now. You look back here where I drew this one, hung out here, pulled back to bounce there, kind of hung out again over here. That's why that one's marked. I don't need to mark here, these two highs, because that's my zone. It's also where these came down. So that's my zone. That's the major area I think it might turn around. So again, definitely need to mark both on your chart. Eventually, I know it looks like a war zone because you're down on 3 or 5 drawn lines off support and resistance. You just have to delete them at the end of the day, trade day. That's why I recommend marking them with like a 4-hour SR level, 4-hour SR, or whatever, so that you're aware. This is what I'm looking for. That's what I'd rather see. I don't have a mid zone here just because I didn't draw one. This is Dow. It's between 2 sweet levels here. Nice pull down, pull up. I can erase that old line. I think I got a couple in there. And then we had a nice swing up off that. And when it pushed up to this price level, still a higher low. And then this right here failed. So this turn right here failed to basically blow through that high to make our higher high. So then, you know, we're forming a lower high. Once this red candle stepped in here, you know, that's we formed a lower high. And if you draw a line here to here, that's when that was broke, that candle. So then you're looking for shorts on that, lower lows, lower highs, looking for a short, and it bounced off the previous level. So I'm not even dialed back on this one to look at, because you don't have to go way back. We only have to go way back on these charts. Don't get intimidated and think that you have to go way back and look for the zones. When we go way back, we're looking for the outer trend lines. That's it. We go way back and pull in all the 4-hour candles. We're basically only looking for 2 highs to draw a downtrend line off of and 2 lows to draw an uptrend line off. That is it. Other than that, we do not need to draw any. Then zip kind of out, blow it up, and then we're looking for more immediate levels, immediate price points. I don't care where Dow was 4 months ago. I really don't. I don't care where it was 4 months ago. I need to know where it was last week or 2 weeks ago. So right here is August 5th. So that's a month ago. August 5th, nice swing down, turned right at that price for some reason. Why? Well, the market makers. That's one of their prices. Pulled back, hit the top of that. Technically, it's a higher low because the wick of this one's down there. It pulled up to make a higher high. Hung out for a while and broke that. That's why this line's there. This was the point. Nailed it a few times, broke it, and then went on up. This trend line was originally drawn from this point to this one. That's where I originally had it. Once this candle closed on the other side, because it did close briefly. See how it closed below it? This is why you wait for a test of the levels. When the 4-hour candle, this one pulled back to test it, well, it blew back through it. So you have to say to yourself, is it really ready to go short? And it wasn't. It went longer. That's just a nice size retracement where back to this level of support and resistance. Right there were the bodies. I like to draw the lines off the bodies. Sometimes I'll draw them off the wicks, but if you look at the bodies, you'll see other bodies close or other wicks touch. But it basically goes there. So what I had to do then was, when it wasn't ready and it kept going, was move the trend line here off of this candle. I forgot I turned the handy magnet off. So that's where I drew it once these candles form. Well, then you see it pushed up, pushed back, and then it finally blew through that trend line. And what do you see here? To me, that's a pull back up to test the high, broke it, and test the back of that trend line. So there's your 4-hour test of a trend line. And then, so you're still thinking longs all the way through this. And then, because we're down on a smaller time frame. But then when it comes back up here and stalls out at that price level and just hangs out there for a few days, a day or so off the candles, then it pops the red candle, breaks that trend line. Well, we might be in for a short. And that's all we're doing is pulling short. So that trend line's coming off. And basically what I would want to do is draw one from here to right there. And that's going to be a 4-hour trend line. So I like to make those thick. As thick as I can. Because that's my 4-hour down trend line right now. So again, here's where it is now. And not looking to trade it, but I would get in this. Ultimately, which way should I be thinking? Well, if I want to trade with the market direction that's really come into play over in here when it started turning around, you know, that actually happened around, this was last Tuesday. So last Tuesday, it came down and broke that little trend line as well, formed a lower high than that one. And then when it popped down, I mean, through the week, this was on the end of day Tuesday. So during Tuesday, it basically broke through the little uptrend line I had here, broke through the 4-hour support and resistance level, came down, hit this one, and pulled back. And that right there is 6 a.m. on Wednesday. So by Wednesday, it was pulling back, and it tapped that support and resistance level. So that was an entry to get in. And again, we're on a 4-hour. So if you're down on a 5 and 3, you're pulling partial. You're not sitting through all this as it goes. But basically, we're in a bearish push, bearish market. So I want to think right now. Right now, I have to think about it and say, okay, it's pulling down, 4-hour time frame, nice bearish pushes, nice drop, pulls back, hangs out for a while, nice drop. Well, on this drop, it turned, pulled back, and hung out for a while before it dropped again. So what could I think might happen? Well, had a nice drop. Can it pull back and kind of hang out for a while in here? And then get a nice push. Yeah, I could see that playing out 100%. Could it open and come down here first and then pull back? And then you see some sideways movement, a retest to this area, maybe even, and then it goes. I could see that playing out. So this is where you get in those if-then scenarios. How are you going to trade this? Ultimately, I would love to see this. I'd love to see it come up, test those two areas, and go down through. That's what I'd love to see. Okay? And just know that it's not going to look as clean as that. That is not going to look as clean as Butch's drawings if that does that. It never does, because it moves in smaller waves. Okay? Ultimately, that's what I'd love to see. I'm getting in short here. If it pulls back to this level, guys, it could shoot straight up here. I mean, it could. It could shoot straight up here and then start rounding over and pull back from there. What I'd like to see is I'd like to see a nice pullback to this support level that was over here. And that act as resistance, and it turned. Not just right there, but I have a trend line there. So I'd love to see it pull there. At that point, I would look to take it short. And then my pull partial should be in here, because we're down grabbing more than just a little bit on that. So it should be there, would be my first take profit, where Thursday's candle closed. Or that was Friday, sorry. That should be my first take profit. And then if it gets to here, I'd close one more out. If it gets to here, I'd close one more out. But ultimately, that's where I'd look for it to go. All right. Now we get to Bitcoin. So Bitcoin's a little different when you're looking at it. Trend lines don't hold up on your crypto. They just don't. We can look for levels to draw them off of. Sometimes we can get a decent level. Sometimes you can't. So you'll see I do have one down here. And then I did draw one off of these wicks here looking for a target. So I'm not trying to get you guys on channels. There's a channel tool out there. On the channel tool, you can actually draw off the tops and it'll mimic and give you a parallel line. Well, when I was looking, I knew that these lows did not line up with these highs to be a parallel line. So I just drew a separate line. So the reason why you would want to draw both is because this will give you your targets. That's a target line, basically, is what it is. If something comes down and forms a low, comes back up and forms a lower high, what is the next thing we think it should do? So it's formed a low, lower low. This low is lower than all these. Formed a lower low, came back, formed a lower high. What do we expect it to do? It may not pan out, but what is our first thing that we would expect it to do to stack the odds in our favor? Well, we expect it to make a lower low. Well, in order to make a lower low means it has to push past this one. So that's how the lines help. You won't see these on my chart. I don't always draw them on there, but I wanted to kind of draw that for reference. If you have, I used to love the parallel lines, but I just knew I couldn't use it on this. The parallel lines I'd love. Draw it across tops. It's a equidistant line. Slide it down to one of the lows, and that's your target. So with this, I saw it's not going to be parallel, but I wanted to point that out to you guys because when we're trading something that doesn't trend a lot and doesn't give us nice areas to put trend lines, well, we need to look for a different way to zone in on those smaller moves that aren't particularly trending. Okay, so we were in short. This was fun the other day. Oh, there's my little order. Can anyone spot the little order? Sorry, guys. That's it. That little red and green box right there. You can't hardly see it, but that's when I shorted on Friday. And my target was not all the way down here, but we have lines drawn. Okay. So that is not where the target was. So basically, when I took it, and basically this just moved along with everything else. And I'm not going to go over the whole trade. I've already done it. It's out there. I think I went over gold and Bitcoin separate, and I did them on a replay kind of setting so that people that have not seen, look at that gap, guys. Market's open. Can't beat that live action. But look where Bitcoin just opened up. So a definite gap. I have never traded Bitcoin on gaps. And plus your spread's probably wide right now. So you have to be careful at market open. I have no idea if it's going to go back and fill that gap or if it's going to go up to the 4 hour. I don't want to get caught up in that. So I'm not looking to trade Bitcoin at all. I need to see a good setup. And this was non-farm. And this is what I talked about. I'm not, again, going to go over the whole trade because I went over that in another video. But this is the non-farm candle, the 5-minute non-farm. So it pulled up. I did not go long through here. And hopefully you can see why. I have a 4 hour, or I have a trend line down here. Let me zip this back over. So there's a trend line drawn from back here, the high point where I have a zone, drawn down to here to this point. That was 0.2. And that is where I had a trend line drawn. And then we also have a zone, 4-hour zone. So as I was down on a 3-minute, that's what I saw. 5-minute non-farm candle or 3-minute, pushed up, pushed down, test the bottom of the zone. If I was trading on a short term, like a 1 minute, and wanted to get caught up in the first few minutes of the market, I could have taken that long, but I did not. I sat out. After all, this is Bitcoin. This was my first non-farm event with Bitcoin. I traded Bitcoin before. I don't even trade it every week. I might start, but I don't even get it. It's like once or twice a month is when I take Bitcoin. I need to see a good 4-hour setup is what I've traded. But looking at how it's been dropping, okay, because if you go back and look at the higher time frame, I think it's dropped $12,000 recently. Well, that's a huge drop. So as long as it's dropping, I might as well make some money on the drop. If it starts giving me higher highs, higher lows, then I'll look to get in long as it climbs back up. So basically, I did not get in long here because of this. It's in a zone. And there's a 4-hour downtrend line. And lo and behold, it turned right on that line. And remember, this line's not drawn off this point. My second point's on back. So it turned right at that 4-hour line and then blew through. I drew this. This was the top line at non-farm, and I actually had one here. Those were my 2 lines. That's your 3-minute non-farm, and I was down on a 1-minute. But what I did was I drew a horizontal ray off the bottom, horizontal ray off the top, marking my 2 areas. That's the non-farm candle, wicked up both ways, up and down. So when it broke through that level, that high, and that low there, I still didn't get in because I have a zone, okay? And I better pull to a 1-minute because someone's going to ask me, why does it look like your entry's there in the middle of a candle? So I better push to a 1. And now I got to go back and find it. That's why my trade marker's right there. It's because I was on a 1 watching. So when you look at a 1, pull down, pull back. So basically right here, it hit the high of non-farm, which held up there a little bit. Pulled back, pushed down through it, pulled back and tested it. So I'm looking at this going, okay, I'm seeing it round over and start to give me signs that it's going to go bearish, which I love to see after a news release starts, because a lot of times, not always, sometimes a news release will pop one way and it'll just keep going the rest of the day. But more so than that, a lot of times the news releases will pop one way and they will turn around and come back to where they started, which here was the start. That's before non-farm. And if you look, that's right where it stopped. It almost stopped on a dime, a tick. I don't know. I haven't measured those 2 prices. But if I look at that low, it's about where non-farm was before it started, before it came out. Okay. So it's no wonder why it stopped there. I mean, again, you're looking at this going, well, no wonder why it stopped there. It's over here. It's where it started. It's where non-farm started. So right before non-farm, that's the level. That's where it was. And if you look to the left, that's where it was. Okay. So don't let these turning points surprise you over here. There should be no surprise when you're trading on a smaller time frame why something turns where it turns. As long as you look on the higher time frame or look to the left and mark your levels, when it comes to hit something like this and turns around, pulls back, you should be able to look at that and go, oh, yeah, I marked that. I marked where the market was, where Bitcoin was before non-farm. I marked where gold was before non-farm. Then when you see this happen, you're not shocked, surprised. You're not panicking. I got in here. That's the price where I got in. When it came down here, I closed partial out. Then this was a pullback. Okay, see where it pulled back? So it pulled back almost to my entry price right there. It almost pulled right to it. So you're not panicking. If you put on 10 lots and you did not close out partial and you held through, some people freak out here when it pulls back. And some people will freak out. It's coming back to where I got in. I better close. And they'll close only to miss all that. Okay. So again, if you look to the left and mark your levels, it should be no shock. It should not give you that, what in the world moment. You should have none of that. It should come down and stop and turn like this. And you'd say, oh yeah, that's where Bitcoin was before non-farm came out. It should not be a shocker. Okay. And then it just kept trending. But that's why you have to leave the runners on. I'm a firm believer in runners, and I was in Bitcoin all day Friday. I did not have to keep getting in. I did not get in once, close it all out, get in once and close it all out before it hit where it was, start of the market, then look for another entry. And then it pulled past it, pulled back. I'm going to get in short again. It pulls past it, pulls back. I'm going to get in short again. There's none of that. I put on 20, closed out 15, had 5 runners. On an extension, I will close out a runner and move my stop. So every time it extended itself, I closed out a runner, move my stop. And then it extends itself, close out a runner, move your stop. Extends itself, close out a runner, moves its stop. Eventually, you're going to run out of runners. And eventually, I ran out of runners, and I had one left on. And all I had to do was move my stop. I don't know, my stop was up in here somewhere at one of these. And I just left it and said, we'll stay in the rest of the day and see where it goes. So, but you guys know I'm big on the runners, and this is why. That's where it ended up Friday. I mean, that is a long run down. Now, if you moved your stop tight off of like this high, you've been stopped out here. If you moved it off of these, you'd been stopped. I left mine out of the way, just said, I don't care. Mine was down off one of these highs. I can't remember which one. I'd have to look back at a chart, but mine was out of the way. And I just said, that's acceptable to me, that level. And again, I don't remember which price it was, but basically my stop was above one of these 3 highs. And basically you look at that and one runner is from here to here. There's my entry. That last runner that I had was here. And so I was still locking in a good hefty profit on one runner. But then I was able to close out at the end of the day, and it was down here, in here somewhere when I closed out. So that's why we leave runners on. So again, in with 20, closed out 15, and then as it extended down, closed out, moved my stop, closed out, move my, this run down, closed out, move my stop in here. Every run down, you close out. Well, eventually you run out of runners. So then you just leave your stop and it's like, okay, I'll just monitor my stop and I'll adjust my stop as it goes. And yes, sometimes you're going to see this. When this pulled down, well, guess what? It didn't extend past here. So I wouldn't have moved my stop off this level. There was no extension past that. Only over here did it extend past this low. So we had an extension, move your stop. So if you had moved your stop down here off these highs, you'd have been stopped out. And you have to say to yourself, so be it. I moved my stop. When you look back, yeah, you're going to go, I could have made more of my runner. This is a personal preference, how tight you want to make the stop. I chose to give mine a lot of room because I really didn't care. Your runner's up, let's say $100, $150. That's what you're going to lock in. Let's say 100, and you're going to leave your stop out there in case it keeps going because you got time in on the day. If you look right here, it was our lunchtime, and that's when I left. was 12:30 here, and went out for lunch, went to the coffee house. So that's 12:20. So I left when it was in here. I didn't move my stop tight, but that's where it is. So on Bitcoin, as far as what it looks on, the 4-hour and tradable now, we just saw a big gap open. So I don't know where it's going to push now. And I'm not looking to get in something right now. I might later. I'm probably going to, at 8 o'clock, I'm going to start looking at Bitcoin with gold and see how it's panned out the first couple hours. We just started and it gapped up. So I'm not looking to jump in. It would be kind of foolish if I just jump in right now. Do I have any odds in my favor? Well, really, it's been going short. We've been in a bearish market. Friday, I was in it short all day. So I should be thinking go short. Should be thinking sell. See it pop up. Right now, it's pulling back. Is it going to turn at one of these levels? I would rather wait and see what it does, how it sets up in the next 2 hours. Is it going to pull back further and start turning and rounding over at one of these levels and give me a reason to take it short? And then on the down on the lower time frame, I would have to look to see about drawing a retracement line to that trend line. Now that trend line is way back there, okay? So what I would have to do is, and this is what's horrible about the Sunday gaps, I would rather see this move right here be down here, right off this. But the weekend, the market's still moving. That's why you get the gaps. So I would rather see that down here, and I would rather be able to draw some sort of retracement line up to here. Okay? And that would actually be a retracement line. So not a trend line, but a retracement line. So a retracement line is just drawn off of lows. It's pulling back. It's pulling back where? Well, it's pulling back to our 4-hour zone that it turned at on Friday at non-farm. So that seems like, well, if it did it then, if it was enough, if that price was enough to hold back the non-farm bullish push, well, it might be a level I need to be aware of. So again, if it keeps pulling up, I would love to see it pull back up here, test the bottom of that zone. It's also testing the bottom side of this 4-hour down trend line, and then pulling down. Yeah, I know. I just don't have that one up here on this broker. I don't know if I can get it on this one, can I? I'll have to check. I didn't think I could get the Bitcoin US pair chart. If I can, I will, because that would be a better one to track on. But anyways, if it pulls back along this retracement line, I'm looking for it to turn. And guys, it could turn at any one of these price levels because these are off. This one's off a 4-hour time frame. So it could turn there. But that's how I would look to trade that if it pulls back. Ethereum, does anybody in here actually trade this? Trade the Ether? I don't know that anyone does. I thought someone did. I was expecting it to possibly pull back up tonight, which at the start of market, they're all popping up. But the reason why it was at the top of this 4-hour zone is where it closed on Friday. So the close of Friday was right at the top of that zone, which is off this low. And basically, I charted the low between two candles. So you'll see the wick at the bottom of this candle and then the wick at the bottom of this candle. I didn't want a really big zone, so I'm not going to take that and draw it from here all the way up to the 4-hour time, or all the way up to the body closes there. Okay. So what I did was basically, that's my zone, and that's where it was. It's at the bottom of that. So I was expecting a turn. I didn't know if it would happen right at the market or not. So for me, I'm not in this. I might trade it. I don't know. I haven't traded Ethereum. So let me know if you trade it. I know a couple of people I think have watched it. I have never traded this one. I like Bitcoin, and I did it twice last week. But before that, it was only like twice a month. It has to be set up for me to take on a higher time frame. I just want to be a little safer trading that. So I would draw for a trend line as far as like resistance. If you come down, look at these highs. I would draw off those two highs right there. That's where I would draw a downtrend line. Again, the downtrend line, it doesn't mean it's going to keep going down, but your trend lines hold up just like the zones do. They hold up as support resistance. So if you look, as you draw, as I drew a line from here to here, when it turned here, made a lower low, it pulled right back to that trend line. That trend line, and also along with this price point in here, over here, that price level, acted as resistance, and it bounced off of it. So it's not just the trend line. It's not magic, and it's not just off the trend line, but it's a combination of trend line and a zone. Okay, so right now it's retracing back up to this nice swing down and up. So nice turning point. I just have a 4 hour in there, and I'm going to change that. Actually, I want to be aware of the wick down here, but I want to draw it from the candle body, and that one's going to be the mid zone. That's going to be yellow, and I'm going to leave this one yellow, but I would flip it over to red right now. I only look for one above as a red, because this right here is a major. Actually, I will turn it red. If you look as it pulled down, that's a major level of support resistance. And when it broke through, major level of resistance here. So this zone acted as support over here. 4 hour turns. It's acting as resistance over here. So I am going to turn that red, actually. That's a pretty strong level. So let's make this our upper, because that may be as high as it gets if it breaks. So again, we're seeing a big push right now. I'm not in it. I need to, if it starts rounding over here in this zone, just be careful, because it might pull to the top of that zone. Because if you remember up back here, that's the body. That's where that 4 hour swing right here down, that's where that body closed. This 4 hour swing right here down, that's where that body closed. So just keep that in mind. That's what that top of that zone is right now. So it could go test that top of that zone. So I'd be down on a smaller time frame just watching as it pulls back. And again, what we're doing is kind of waiting for things to set up over the first couple hours. I'll look at that too here in a couple. When it gets to currencies tend to respect trend lines a little better, I think, than definitely like Nasdaq. Nasdaq, I don't really like looking for trend lines on them, because there's not always one to draw. So with your indices, your metals, even oil, they tend to go off price more than trend lines. But I will go out and see if something has some trend lines it's respecting and draw those. Here's the British pound. Nice pull up. Swing up, turn, lower low, lower high, nice move down. Where did it turn here? Where it turned back here. Pulled back up, actually wicked all the way up to that zone, bottom of the zone, and we're getting a pull off that. So now we have, is this going to stay sideways? I don't know if that's a pullback off this bearish push. This is where you have to ignore the smaller swings. Down here, we're making lower lows, lower highs. 4 hour time frame. That's great. Great pattern, great structure. But then when it blows back here, right now it's pulling down. Well, if you look at the whole move, look at this section right here as a whole move, or even go out to a daily. If you look at this section in here, look at the swings in this section. Ignore the small swings. What do you see? See a big bearish push down. I see a pullback of about 50%. I'm just kind of guessing on price. Might not be quite 50. But I see it push down, pull back about 50%. So is it going to push through this? That remains to be seen. So in the meantime, on the smaller time frame, you have to know that that's what's happening on the bigger chart. You just have to be aware that this is what's happening on a larger time frame, or what has happened on a large time frame. So can push to a lower low than this one. Now it's not going to go straight. It's going to move in waves. So this is part of analyzing the higher time frame to decide on what you need to be aware of. Now I don't always leave them on the charts, and it could sit more sideways in here before doing that. So overall, same thing on the currencies we're looking for. We're looking for it to pull the zone, round over. It'll either do it here or here, give a higher high, higher lower in. But I have to keep in mind that it may push down here, and it may push down through these zones to test the back of this trend line. And then it could pull right back up to here. So that's kind of my cautionary on that, is just keep in mind what's happening off the other time frames. Canadian dollars, same thing. It had a nice bullish push, bearish push down to this level that I had a 4-hour zone or level off of support resistance. That's where it's at right now. Okay. I'm not looking to trade right now, the currencies. I'd rather wait till they have news come out. I want them to have a news catalyst to help push them. I want that volume. So what I do is I go out and look at the foreign exchange calendar, and go out and look at the Forex calendar, look at where news is coming out. Now, the news on the Canadian dollar comes out at New York session. I love trading the Canadian dollar during the New York session. 8:30 in the morning is when the news comes out for the Canadian dollar, typically. So that's when I look to trade the Canadian dollar. If there's news on the British pound, it's happening during the London session, the euro, the pound, the Swiss. Well, then I'm going to trade those three during the London session, especially the start, especially when those news releases come out and start moving the market. So think about it. Think about it this way. So think about it when you get up out of bed in the morning. So when you come to the charts to trade the London session, or when you get up out of bed, you're kind of groggy. You've been sitting there for hours, like laying in bed for an hour, half an hour, thinking, I got to get up. You've been sitting. Then you go have your coffee. I had to get to the coffee. So you go have your coffee. After the first cup, you're awake a little bit. So when the market opens, you're awake a little bit. It's awake a little bit. After your second cup, you're really flying. For some, I know it takes 4 or 5. But basically, when that news release comes out, it starts flying. And you just have to be ready. Wait out the first few minutes, half an hour, depending on what you choose as part of your rules, and then look to trade, look to get in something. So I love trading the currencies on really, really good setups, but also when news is coming out, because you get that volume, you get those pushes. So right now, again, I don't know where this is going to set up, but ultimately you have to be aware of where the news releases come out. I have a zone down here where it was kind of flat, and then I have a zone at the top of that push. Those are all I need. And then I have my support resistance lines, and that's really all I need. I don't have to draw some zone, and I really don't have wicks. These 4-hour candles, there's really not a good size wick to draw off of. I wasn't going to draw off that wick because it was already right there. So I just drew a line off that. But basically mark those swings, mark those turning points. This one was marked because of this candle. I saw these and said, okay, that's where I need to mark a level. Well, I just came back and attached it here because I noticed that wick was there, and I thought, okay, well, that level was respected. Resistance, resistance, support, support. I need to mark that level. Okay. So don't get too many lines on your chart, but you need a few to know that if it pulls down, it may actually turn there for a while or stop and rest. Sometimes they do what's called a stop and pop. That's just what I call it, where it pops down, pop and stop. Yeah. It pops down, pulls back one candle and pops down. It's just like a stop and pop. It'll keep going. So that's why we draw these levels. But those are all you need on the Canadian dollar right now. Euro, top zone, bottom zone, off major swings. And then I have several trend lines. So we have an outer up trend line here from that low to that low. And then I had one over here from this low on up, tracking that. This move where it popped up, went sideways, popped up. That's where it originally was. It came down, kind of wicked below this one a little. So I moved the trend line up. And then recently it actually broke it. And when I say recently, this was 8/29. So that was Thursday. So Thursday, it actually tested that trend line, broke it. I did not have this one here originally. Okay. So I did not have that one there, but that's where it came down and it turned right there. Well, I did have my zone. So again, this trend line right here, it wasn't there. Did I do that? I missed it. So originally that trend line was not there. The one I just had from here over to here. But I had a zone there. Okay. So the zone was drawn here off this big swing up. Why did it stop? Why? We had a nice bullish move. Why in the world did that stop? Don't know. Had to have been a price decision between the bullish bear side of the market, pull back down sideways before it go through and broke. So I need to be aware of that. That's my zone. Well, that's where it turned. So when it turns there, no surprise, it had actually broke through a couple things there. I drew a trend line from here to here. Those are my points. After it broke this one. So after it broke this trend line, we had two highs, drew a trend line. Okay, let's see if it tracks that. It moved sideways, tapped it, made a lower low. Oh, over here it broke it. So over here it broke the downtrend line. So I should be looking to go bullish, but I wait for retracement. And that's what it did. It pulled back, retraced basically back to that zone. But down here, it still made a lower high, lower low, lower high. So I try not to get into that indecision. Hey, you broke a 4-hour trend line. It's going long. Wait for the pullback, wait for the setup. And in this case, on the 4-hour time frame, it kind of moved sideways. And then when it pushed down here, well, that's a lower high than this one. And then when it pushed down here, what did it also do? That's a lower low than this one. Green candle pushed up off the downtrend line. That's a good signal. The back of this trend line was tested. Let me zoom in a little bit. So again, pulled down to test the backside of the downtrend line. Green candle. I'm not getting in right there. There's not enough bullish structure set up. It just made a lower low. And it just had come down off a lower high. Lower lows and lower highs are bearish structure. I'm not getting in on that. It pulls up, test that price level again. No higher high was formed. and then it dropped. It still wasn't done going bearish. So it dropped and formed a lower low. Still pushing. It's like clawing its way down there the whole time. It is not ready to give up. But it turned right there at this zone. So when it hits the zone, it's still, if you look, all this is doing is testing the back of that downtrend line. This trend line was not drawn there, this green one. Wasn't there yet. When it formed this couple candles here, well, then I thought, okay, it might be forming, might be going long, but only till it breaks here. Once this green candle comes up and closes, this is a 4 hour we're talking about, closing above this previous high, well, we can say, okay, it's forming a higher high. Let's draw a trend line. So we draw that new one. And then you can get in on a pullback on that because it's technically higher high. We need a higher low. Red candle, green candle, you can get in on that because it's stalled out right at the 4 hour price level. So that would have been a place to get in and trade it back up to the swing low over here. So right now, I have to say that it is in a bullish formation. Overall, it swung up, formed higher highs than over here. Okay, these are definitely higher highs. It's come down, and it looks like it's forming a higher low. This swing down and swing over is definitely a higher low than this where we are here. So now we're looking at this trend line to be holding up. The trend line and this level. These two things is what we're looking to hold this up. If it goes long, then we're going to trade to that target up there, back up to these highs. Only when it starts giving us lower lows, lower highs do we get out. So here's one I kind of drew that channel on I was talking about earlier. So a channel, all it's drawn on is basically highs, lows. You can include the wick. If I include the wick on the 4 hour, I'd have to draw it like that and pull this down here. That's where it would be. 4 hour wicks. And then the opposite side of the channel, all it does is it moves back and forth. So it's an equidistant channel. If you've never used it, it's on there. You plop a trend line. Basically, all you're doing is that top line up there. You're plopping 2 points, point A, point B, basically your trend line, and then you're just dragging down to a low. What I was doing was looking for a target. How far is this thing going to drop? That's what you're doing with that tool, is how far can it drop? How far might it drop? And that's where I went to, was drawing that tool. Basically, I'm looking for, is there a level that it could go to, that it could turn at? Is it going to turn right now? Or is it going to pop to the zone? So I see some distance in here between where this big bullish candle pushed up and the top of the zone. So there's room for it to continue to push down. If it pulls back up, because right now it's bearish. Right now I have to think bearish on this, on the Australian dollar. So if I'm looking at bearish moves, I don't want to get in on an extension. This is an extension. 2 4 hour candles pop down. I could draw a retracement line in here as it pulled back. Okay. So that would have been a retracement line that was broke. So I'm not interested in drawing that now, but that's what I would have drawn if it, when it turned here and went back up. That's all over. We're in an extension. You don't want to get in short on a bearish extension. You want to wait on a pullback. So I would be looking for reasons to short it if it pulls back. Okay. If it goes long, and even if it's here and starts pulling back, can you trade the retracement? Because we're on a 4 hour after all. If I see on a smaller time frame, higher high and higher lows form in a break of the high, that structure, how far is this distance right here? Is there enough room for you to take profit on a retracement? If there is, I'm fine with you getting in on that. Trade with lighter contracts. If it pushes through that red line and goes out here, there's definitely room. So if I do close out partial in here, I'll leave my runners go because it may come through, test the backside of that, and go here. Well, then I got more on my runners. Okay. Will it go to this zone? I have no idea. Will it turn here? I have no idea. If it keeps making higher highs and higher lows, boom, I'm going to stay in. If it starts making lower lows and lower highs right in here, well, then I'm going to look to get in short to the backside of this, around where this low is. All right. So overall, it still could push down to this box. I don't know what we're going to see. I don't really care right now. I'm not looking to trade it. So I normally don't start on the Australian dollar. I want to trade during the Sydney session. And of course, the yen, I'm not going to trade it till the Asian session. And I don't trade it on Sunday night. I wait for Sunday to play out. Sunday, Monday during the day to play out. And then I will look at the Aussie, the Kiwi, and the yen on Monday night during their sessions, when their sessions are in. The Aussie and Kiwi do not move as much as pound, Swiss, euro, or the loonie. The yen, same thing. So you have to look at, can they move as much as the majors? Yes, they can. They can move, the Aussie, the Kiwi, the yen, they can move as much as the euro and the pound and the Swiss and the Canadian dollar. Do they always move that much? No. So here's how I was taught. I was taught that if they don't normally move as much, don't expect that much of a move. Only expect how far they usually move. I mean, don't expect that, pie in the sky move on the Australian dollar. You might get it once in a while, but most of the time, no. So you have to look at these and trade respectfully, how far they would normally move. Okay, just don't think it's going to go and you're going to be shooting for the moon on that. I like where we're at here better on. Oh, we're back to platinum, guys. I'm sorry. So platinum has pulled up. I'm about done. We're about ready to have Grandma's birthday. If anybody wanted to wish her a happy birthday, we're having a birthday party. And that's the thing. I'll be partying for the next couple hours. Not hard. It's Grandma's party. So, but anyways, platinum, all it did was pull back up here. So right now it's testing that zone. So I hope you guys enjoyed it. Again, I went over a little bit more than we normally do, but I wanted to definitely show you guys that you can do these on more than just a few instruments. I'm not trying to get everybody to trade more instruments than they normally do. However, if you do decide to branch out and trade something else, you can use the same analysis. Trend lines, always draw them on the 4-hour time frame. I always look for a good upper and lower trend line because those get respected. And I will go down to a 60-minute. And if I see a good trend line, I will draw them. And then as I'm day trading on that 5 or 3, well then yes, I will draw a trend line. I just call it trade line, and it's dotted. And the only reason why is because I want to delete those off at the end of the trading day. So, and again, mark your 4-hour support resistance boxes. So I know not to delete a box. And then with the 4-hour support resistance levels, the lines, I still use the ray tool, but I label them so I don't accidentally delete those after the market's closed, after I'm done trading. So hope you enjoyed this. Trade safe, and I will talk to you later.